$8,200. That is what the repair shop says Brown's car needs. $4,900. That is what the insurance check says. Same car. Same accident. Same damage. But somewhere between two pieces of paper, $3,300 disappeared. Not through one large denial. Through 5 small labels. Some of those dollars already belonged to Brown. Some were arguments about price. And one deduction might not even be final. So how can one accident produce 2 completely different repair prices? And how can Brown tell which missing dollars he must pay? And which ones he should question? Let us rewind. Brown is driving home in the rain. The car slides and hits a guardrail. Nobody is injured. But the bumper is cracked. One headlight is broken and several sensors may need to be inspected. Brown needs the car to get to work on Monday. Fortunately, he has collision coverage. Brown files a claim and takes the car to a repair shop he trusts. The shop prepares an estimate for parts, paint, labor, and electronic calibration. The total appears at the bottom. Repair estimate, $8,200. Brown does not enjoy the number. But that is what insurance is for. Then the insurer sends its estimate. Approved repair amount, $5,900. One more line appears. Deductible, minus $1,000. The payment becomes insurance check, $4,900. The shop wants $8,200. The insurer sends $4,900. And Brown needs the car by Monday. The first missing amount is the easiest to explain. The deductible, $1,000. This is not a new fee invented after the accident. It is the portion Brown agreed to pay when he bought the policy. A higher deductible may have made his premium cheaper. But after a claim, that same deductible moves the first part of the repair cost back to Brown. The first $1,000 did not disappear. It belonged to Brown before the guardrail ever appeared. Current gap, $1,000. But there are still $2,300 left to explain. The second layer is not about whether the accident happened. It is about the price of repairing it. The shop priced new parts made by the vehicle's original manufacturer. The insurer priced less expensive alternative parts for several items. Depending on the policy and local rules, those parts might be aftermarket, recycled, or reconditioned. Brown hears one word: bumper. But the shop and insurer are pricing 2 bumpers from 2 different sources. The difference, $900. That does not automatically make the alternative part unsafe. It also does not mean Brown should accept it without asking what will be installed. It means that replace the bumper was never one price. Then comes labor. The shop charges $170 per hour. The insurer allows $135. The repair requires 20 hours. $170 minus $135 equals $35. $35 times 20 equals $700. The hours did not change. The damage did not change. Only the definition of a reasonable rate change. Brown asks the shop if its rate is normal. The shop says yes. Brown asks the insurer if its rate is normal. The insurer also says yes. Brown has discovered that normal can produce 2 invoices. Parts and labor gap, $1,600. Total gap, $2,600. The final layer is not mainly about price. It is about proof. Near the damaged panel, Brown's car already had an older scrape. The shop includes $400 to refinish that area. The adjuster marks it prior damage. The shop is asking, does this area need work? The insurer is asking, did this accident cause the work? Those are different questions. Then the shop includes $300 for an electronic scan and sensor calibration. The insurer's first estimate says, additional documentation required. To Brown, both lines look like a no. But they are not the same kind of no. The old scrape may not belong to this accident. The calibration may simply need photographs, diagnostic results, or a manufacturer repair procedure before it can be approved. Proof gap, $700. Total difference, $3,300. And that reveals what the total was hiding. Brown did not have one $3,300 problem. He had 3 smaller problems. Brown's contractual share, $1,000. A repair price dispute, $1,600. A proof dispute, $700. One gap. 3 different arguments. And each argument requires a different response. The repair shop understands parts and procedures. The adjuster understands the policy and estimating system. Brown understands one thing. He needs his car back. So Brown stops arguing about the total. He asks 3 questions. Question 1. Can you compare both estimates line by line? Brown places the shop's estimate beside the insurer's estimate. He identifies every part, labor, operation, and procedure that appears on one document but not the other. The check is too small, describes the feeling. The missing line identifies the problem. Question 2. Why was this line reduced? Is it Brown's deductible? Is the insurer pricing a different part or labor rate? Does it believe the damage existed before the accident? Or does it need more evidence? Brown asks for the explanation in writing in, when relevant, the policy language supporting it. Question 3. Is this final, or can the shop submit a supplement? An initial estimate may be based only on visible damage. The shop can submit photographs, scans, measurements, and manufacturer procedures supporting additional accident-related work. If the disagreement remains, Brown checks the review, appraisal, or complaint process available under his policy and local law. Now the story changes. The shop sends the diagnostic scan and the manufacturer's calibration procedure. The insurer reviews the new evidence and adds the $300 calibration. After the labor, operations, and local rates are reviewed, the shop and insurer also resolve the $700 labor difference. The insurance payment rises from $4,900 to $5,900. The remaining $2,300 is no longer mysterious. $1,000 is Brown's deductible. $900 is the extra cost if Brown insists on the original manufacturer parts instead of the approved alternatives. And $400 belongs to the older scrape, not this accident. In this example, Brown accepts the comparable approved parts and leaves the old scrape out of the claim. His accident-related out-of-pocket cost becomes the deductible he agreed to, not an unexplained $3,300 surprise. That will not be the outcome of every claim. The shop's higher estimate is not automatically wrong. The insurer's first estimate is not automatically final. And not every difference can be recovered. But every difference should be identified. Now return to the 2 pieces of paper. $8,200. $4,900. The expensive space between them was never one decision. Some dollars belonged to Brown. Some depended on the repair method. And some depended on evidence the insurer had not yet seen. The accident damaged Brown's car in 1 second. The first estimate reduced the payment 1 line at a time. Brown solved the confusion the same way. 1 line at a time. Before paying the difference, do not ask only, why is the check smaller? Ask, which line disappeared? Which rule removed it? And what evidence could bring it back?